From a stock market perspective, if the Delta variant increases, there will be still more infections and it will take a longer time for us to reopen. Anything that's connected to property and even mall stocks, the revenues will be hit, travel will be hit, lesser mobility also will impact gas stations, gas companies. It will also impact hotel-related stocks. It will also impact restaurants that get a large chunk of their revenue from dine-in facilities. In the same way, companies that are pivoting and selling a lot online will do very, very well. Hey guys, so the Philippine Statistics Authority just released the Philippine second quarter GDP for 2021. Please do note that prior to this, first quarter last year, second quarter last year, third and fourth quarter last year, including the first quarter for 2021, our GDP contracted. That's why we had negative growth rates for the past 5 quarters, putting us into a recession. As they released the results, we got an 11.8% GDP for the second quarter of 2021. Allow me to share two things about that. Number one, it's something that's very, very high. The reason why it's high is primarily because last year, for example, we were 10 in 2019. We became 5 in 2020. So if you get 7 in 2021, that's already a 40% growth rate. So just imagine it that way. So the reason why we got 11.8% this quarter, we really did bad last year. Comparing the second quarter of 2020 compared to the second quarter of 2021. However, to make this also a bit positive is that everyone was expecting that we would be around 10%. So everyone was expecting already that we would get a very, very high GDP for the second quarter, but we exceeded expectations that way. So two things, it's high because we did poorly last year. It's good in a way though because it's higher than what everyone expected. Please do remember last year we had negative 17% quarter 2 of 2020, negative 11.6% quarter 3 of 2020, negative 8.3% quarter 4 of 2020, and negative 3.9% quarter 1 of 2021. So I guess the resiliency also, the more we start to open up, the more the economy started to open up, the more vaccines we actually had, the ability to treat other people, and the more businesses also started to pivot, and the more also other countries around the world started to get better because a big chunk of our GDP is coming from remittances. The faster the whole world gets better, it also will benefit us in a way in terms of remittances. I just want to mention this also, comparing some industries that were highly connected to the GDP. Agriculture, forestry, and fishery for quarter 2 2020 was at 1.6%. It contracted for the second quarter of 2021 at 0.1%. Industry for 2020 was negative 21.8%. For 2021, it's up at 20.8%. Services for quarter 2 2020 was down 70.1%, but quarter 2 2021, it's up at 9.6%. So major boost from industry and services, which were laggards or which did a bad job second quarter last year.
So this video is sponsored by Marvin Germo's NFT in the Binance Marketplace. To check it out, go to Binance NFT Marketplace and search for @Marvin Germo. Now back to the video.
Our per capita GDP for 2021 right now is at 10.3% already year on year. So in terms of contributors to growth, we had manufacturing at 3.9, construction at 1.7, wholesale and retail trade at around 1%. And as what I've mentioned earlier, agriculture, forestry, and fishing contributed to the decline of industry. I hope you're liking this, and I hope that this is something interesting because at least knowing also how the economy performed for the second quarter of the year will allow you to also get a sense of how we could possibly be also moving forward. Please do note that at August 2021, we are in a lockdown again, and whatever's happening right here will be reflected on the third quarter GDP. I got questions from a lot of people. Why was the GDP good while we are on a lockdown? Please do remember, this does not yet factor in the lockdown, and it will come out on the third quarter result, which will happen in 3 months' time from now. In terms of expenditures, contributors for growth were domestic consumption, household consumption at 5.1%, construction was around 4.7%, and durable equipment was around 2.9%. Top contributors to the decline in terms of expenditure: exports of goods and services, negative 4.9%. Government consumption expenditure, negative 1%. Breeding stocks and orchard development, 0.1%. If you remember the videos that I posted last year, I mentioned that there are three things to watch out for because they will primarily also impact not just the stock market, not just sentiment, but also the economy as a whole. The virus, how big will the cases be? The lockdowns, how consistent are we in terms of opening up? Will we continually go back to stricter lockdown measures, and the vaccine? So as of now, no, from a lockdown standpoint, it's not the best of scenarios. What's nice to see is that we're seeing vaccine rollouts continue. So under those three parameters, cases are getting higher. We are still in a lockdown, but vaccine rollout is faster. So out of the three legs, one is better, two is not. If you look at it also, somewhere around May, somewhere around June, cases were lower. Somewhere around May, somewhere around June, vaccine rollouts were faster. The economy was also reopening and pushing forward. We went into a lockdown at some part of the end of the first quarter this year, but I think there's a lot of businesses ready, companies, and even people that have adapted, that have found ways also to get around this and to also earn. And it's not like the lockdowns that we had on March 2020 where literally a large chunk of the economy was put into halt. Public transportation was put into halt. Even at the lockdowns right now for the third quarter, we're locked down, but you can still order, you can still get takeout from food establishments, and public transportation is still available. Remember what I mentioned in terms of our GDP as a whole, not just the growth. 2019, before the pandemic, first half 2019 GDP was 9.4 trillion pesos. First half GDP last year was 8.6 trillion pesos. 2021, first half GDP is at 8.9 trillion pesos. So that being said, our GDP for the first half of the year is already higher than what we had in 2020, but it's still not back to pre-pandemic levels. We're still not higher than where we were in 2019. So most likely, looking at it, at least comparing first half growth rates, it will probably happen next year or probably 2 years from now, in my opinion, depending on how the lockdowns would actually go and how fast the pandemic rollouts would be. But we're not yet back in terms of our GDP, in terms of where we were prior to the pandemic. And please remember, it's not about getting back pre-pandemic levels. It should be that we're getting higher, we're going higher, we're pushing above where we were in 2019. One of the things that we have to also consider is that we're not just looking at the Philippine GDP in and of itself, but we are comparing it also up against its neighbors. We should not be laggards in our own region. It highly impacts also where investors will put their money in. It highly impacts also confidence. It highly also impacts to see who recovers faster. And it's expected that majority of the GDPs in our region would exhibit growth. But what's interesting is, at least for those that disclosed already for the second quarter of 2021, we're right there in the mix. I believe Singapore is at 14.3%. The Philippines, as what I've mentioned, is at 11.8%. Indonesia is at 7.1%, Vietnam is at 6.6%. We're still waiting for what Thailand and Malaysia will disclose, but I think this puts us in the thick of things. From a stock market perspective, if the Delta variant increases, there will be still more infections and it will take a longer time for us to reopen. Anything that's connected to property and even mall stocks, the revenues will be hit, travel will be hit, lesser mobility also will impact gas stations, gas companies, it will also impact hotel-related stocks, it will also impact stack restaurants that get a large chunk of their revenue from dine-in facilities. In the same way, companies that are pivoting and selling a lot online will do very, very well. The story of Converge, PLDT, and Globe Telco companies, I think, will also do very, very well as well. It will be that narrative similar to where we were in 2020, that those that are thriving while people are locked in will do well in terms of revenue. And it's very evident. We've seen it with Century Pacific, we've seen it with Converge, we've seen it also with broadband of PLDT as well. And I think that's what makes it very interesting. But above and beyond that, it also poses a greater push to be diversified in US stocks and cryptocurrency market. If you want to be hedged, I guess, from certain uncertainties right now, it places a larger and compelling reason also to continually stack Bitcoin, to continually stack Ethereum, to continually stack in those large companies outside the Philippines as well. And if you want to come into the Philippine markets, I think it would be very prudent to position in the ones that are thriving right now. Or if you're buying the ones that are relatively laggards, you must manage expectations that it will take a longer time before it pushes up as well. I guess if you're investing in the index, the PSEI, you're investing in mutual funds, it's always a good time to stack. If prices are lower, it will be always a good time to buy and accumulate and add as much as you can while prices are lower. You have to realize that every time that there will be negative sentiment towards the vaccine, towards the lockdowns, and towards the virus cases, we will experience downward pressure in the market. But every time we start to reopen, every time that there's a breakthrough in a lot more people getting the vaccines or lockdown measures start to ease once again, you will see more bullish pressure to buy up the markets as well. If there's some things that you should look out for, it should be hinged on those three: the lockdowns, the vaccine, the number of cases that are going on. But should this stop you from investing? Not at all. We can't control the GDP, but we can control how we manage our risk. We can't control the GDP, but we can control where we deploy our capital. We can't control the GDP, but we can control how we raise cash, how we store cash, and how we deploy them to where we see fit. Because I'll say this over and over, that we are in the midst of the pandemic still. We are still in the midst of a lockdown. Technically, the economy is not back to where it was in 2019. We're not even about that. But there's still a lot of opportunity. Money can still be made. It doesn't mean that if the economy is bad, your finances should also be bad. It's time that all 280,000 of you watching this figure out that you can win, you can earn, and even if you're investing in Philippine stocks, US stocks, or even the cryptocurrency market, it can be done, you can position, and we're still sitting on and living in one of the greatest times to be alive. So I hope you guys got a lot from this, and I want to know your thoughts on this. Was the GDP result something that you expected? Was this something that's good? Was this something that surprised you? Did this motivate you to invest more? I just want to know your thoughts. And if you stayed up until the end, please do let me know. If you like more video topics like this also, please do let me know as well. And I guess that's it for now. If you want more videos like this, like, share, subscribe, and smash the bell to get updated every time I come up with new content about investing. Check out the links also below for the online courses that I have in fundamental and technical analysis, for the books that I've written that are available in Shopee and Lazada. And if you want to invest in crypto, US, and also the Forex markets, they're all in the description below. So that's it for now. Marvin Kermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.